Alright team, welcome back to a brand new video. Today we are at what is profitability, sorry, episode 4. Risk management is king, okay? Capital preservation always comes first. So let's get right into it, right? Risk management is not supposed to be sexy. It's just the essential until you blow your whole account, right? Or it's going to prevent you from blowing your whole account. I've done that many times, and every single time it was because I forgot this one truth. Your real job as a trader is not to trade. It's not to press buy or sell. It's to protect your capital. Okay? Trading isn't just about making money, it's about not losing your money like an idiot. And what I mean by that is that when you enter a trade, you need to be able to say, even if I lose this trade, would it be a bad trade? And if the answer is no, then good. If it's yes, that's losing it like an idiot. Okay? Because the truth is, again, I've done it multiple times and it's not fun. It's until that switch in your head pops or flicks on that you'll finally understand, okay, I need to be protecting my capital more. I need to start implementing a real risk management strategy and one that works for you, that is tailored to you. Now, I can help you with that, but I can't make it for you, okay? Because here's the real truth. Everybody tilts on different things. I've said that multiple times. And what makes you tilt might not make me tilt, and what makes me tilt what might not make you tilt. And the important thing is to come into the day and do the exact same thing every single day and not tilt. Okay. So if I just take one example before I keep going, me, I don't mind not being in a trade. What I don't like is taking a bad trade. Some other people, I know people that they take bad trades, they don't really care. They don't like missing out on the trade because I'd rather lose a trade today and be done than go on tilt and blow the account, right? So if for you, you'd rather be in the trade and not miss the trade, because then if you miss the trade, you start feeling some FOMO, which is fear of missing out. You enter a really bad trade from there, and you might as well have entered the first one, and you still would have hit SL, okay? But yeah, at least you took one trade, not like one, two, or three revenge trade, and then your FOMO, and then whatever, okay? So let's get right into it. Let's start with risk management. It's not just about setting your SL or your stop loss. It's the entire philosophy of how you survive losing streaks, how much you're allowed to risk per trade, whether you live to see your edge play out. You're not a trader if you can't manage your risk and you're just gambling in a hoodie with trading view open. Okay, you're just basically, you might as well open a casino website and just get it going. Okay, you could have the best setup in the world, but if you go 50% risk trying to flip a $100 account, you're not trading, you're basically praying, because losing streaks are going to happen. We're in a world where probability and numbers and whatever are very dominant. And here's the truth. Losing streaks will happen, and in the whole world everything will happen. Okay, if you guys don't know that theory, you might look it up. It's pretty interesting. But basically what I mean is that even if your model is 95% win rate, you might lose 5 trades in a row. It's possible, and it will happen to somebody. Okay, because the numbers don't lie. So again, you could have the best setup. You need to learn how to risk your money properly and do it right. Okay. So how much should you risk per trade? And now let's get real for a second. Okay. If you're trading a personal account, the common rule is 1%. So it gives you like, 10 losses before you're like really big in drawdown, or 0.5% per trade, 2% maybe. But if you're funded, one bad trade with too much size can actually wreck your account, because then your drawdown is closer, you have less kind of space to move, and it kind of ruins your mental and shit like that. And that is why in the evaluation phase of an account, a funded account, I like to risk a little heavier, because the actual risk is like 50, 60, $70, whatever you pay the account for, right? So if you risk, let's say, 35% of your drawdown in one trade, which means if your drawdown is 3,000, say, you're risking $1,000 per trade. That sounds like a lot. It takes 3 trades in a row for the account to be gone. You're right. But that account is not actually gone. They give the account the name of a 50K, but really you're playing with 3K. But when you pay for your 50, 60, $70 for it, you're stuck in a pattern of not making any money. So for to pass the account, I always say risk more, risk a little bit more just to pass it faster, okay? That way, once it's passed, now you can start risking much less, 0.5%, 1%, 0.25% even, depends on the setup, right? That's why when I'm on a 50K account, let's say, and I'm trying to pass an account, I risk $750 per trade, which means I could catch 2 2-hour trades and be done with the evaluation. And once I'm funded, then I take it like as a real 50K account, because from that point on, every profit you make could go in your pocket. In the evaluation phase, it does not. So if you risk 35% on an eval, let's say with $3,000 drawdown, technically, let's say you paid $60 for it, you're really risking $20. And if you can't afford to put $20 on the table in the eval, you should not be buying the eval. Or else you're just gonna be, might as well trade demo. You're gonna be stuck in that eval forever. And that's what the prop firms want, by the way. So it's not about flipping the account really. It's about keeping it and keeping you funded for a long time. Now, the psychology of losing is, let's talk about emotion here a little bit, okay? You don't blow your account because of a bad setup. You blow it because you get mad that it didn't work, unless you took a bad setup. But generally speaking, right? You could maybe take a bad trade and then you revenge trade, or you double your size, or you remove the stop, or you move your stop, or you say maybe just one more, maybe this one will hit, you know? And that's the cycle, that's the downfall. And that's exactly why risk management is king. And that's why if you apply good risk management, you might pass your funded account very fast, or you might fail it very fast as well. But at least you can get another one and keep going. And at the end of the day, if you spend 50, 60, $70 on an account, even if it takes you, let's say, 5 accounts, okay, you spend $250. Once you're funded, making that $250 is not that difficult, right? That's usually the risk for one trade, for me at least, is around $200. So all you need is 1 hour to make all your money back. Does that make any sense to anyone? And if it does not, leave a comment, DM me, I'll answer. Okay? Trading is not black and white, okay? Some trades deserve 1 hour risk. 1 hour is your maximum. I count 1 hour as your maximum risk. So let's say me, I'm on a 100K account and I'm thinking I'm gonna risk 1% every trade. That's my 1 hour. That's my max risk. Some trades might warrant a 0.25 R. Okay, you need to learn to scale your risk based on your confidence, on structure, on market experience, and on a bunch of different things, right? For example, if you're counter trend or unsure, if the market is not, you realistically shouldn't trade. But if you do take a trade, please, 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 oh please, de-risk. When I take trades on Monday, I go 0.5 to 0.25 R. So if I'm risking $1,000 usually, I risk 250 to 500. If I'm on a Friday, I usually risk 0.5 R as well. Now, it's important to say as well that sometimes, even on a Monday, sometimes the action is good. So let's say I enter half risk. I see the market is good, it's reacting properly. I can enter the other half risk later. And sure, my account, my original entry will technically be a little higher, but if depending on how you put your stop losses, it might balance out. Does that make any sense again? Okay. If your trade is high confidence with an SMT, an EQ tab, displacement, news is cleared up, maybe you can size up, but again, you need to do so responsibly. Okay, the goal is not always to win big, it's to stay in the game long enough to win over time. Okay, the truth is, guys, that you won't be 100% logical every day. Here's a little reality check for you guys. You're not a machine and you never will be. You can try to not be emotional, but you will be emotional a bit at the end of the day. It's normal. Okay, sometimes you'll be tired. Sometimes there's days you're gonna wake up, you're gonna be more emotional. Maybe you just got in a fight with your girlfriend. Maybe, I don't know, shit happens in your life. You're distracted. You're in a rush. Okay, risk management is the safety net kind of for your worst days. Okay, it's not just your plan. It's kind of like your emotional insurance policy. Okay, because like when I look back at the day I blew accounts, it wasn't because I didn't know better. It was because I ignored what I knew better. Right. So if you think the goal is profit, it's not. The goal is controlled risk that allows for profit over time. Now, trading is an art. Once again, I say it all the time, trading is an art. And you need to focus on perfecting your art rather than making profits, and the profits will come with it. Okay? Because you cannot grow what you cannot protect, not scale what you cannot manage. And if you cannot be funded, or you cannot be funded if you're always chasing a high. Okay? Probability isn't about how much you win, it's about how little you lose when you're wrong, right? So ask yourself right now, what's your max risk per trade? If you don't know, you're in danger. Okay? If you guys want to comment below what your risk is, we can talk about it. I've been there, I've passed multiple accounts, I've also blown some accounts, but I've made a lot of money overall in my trading career, okay? And the thing that changed most of it is risk management. I'm going to show you guys really quickly. I just need to pull it up in my Discord, my swing trades, and you guys are going to see what I mean by risk management. All right, so let's go very, very quickly here, okay? I alerted this trade here, which was to kind of take this to the high here after my swing strategy had all the box ticked. So we had a good start here. We're in profit, whatever. The roadmap for the risk management I posted here. So BE here, buy side, profits at the high. And I said, if a candle closes below the dotted line, I will exit this trade. So technically, this trade was like a 1 to 3 or something, right? I'm risking $40 on it overall. If this shit decides to like one candle me out. So far, so good. Whatever. We're still in drawdown, still alive. Whatever. Accumulating. I risked accordingly to this accumulating here. I wrote, I like what I'm seeing here. We're still in some drawdown here. And then I wrote here, I closed the trade before end of day spread ruined me. Problem with trading, for trading is, oh well, lost 15 USD, made 90 Monday. We win some, we lose some. We'll look into other pairs tonight. The volatility was dying down. Trade showed little to no bullish momentum. Unfortunately, I'm not willing to stay in it any longer. I will keep you guys informed when or what I enter next, right? And then the trade ended up going south. So that would have been the full 40 loss, but I recognized the market condition and I adapted to them. That's the risk management. Now, if we take a look at the trade right after this one, right? Tapped into the USD CAD trade here, or whatever. This is my $100 to 50K account challenge, by the way. So swing going, whatever, shit's going, looking good again here. Up $58 right here. Again, we lost 15 on the last trade, okay? Again, my stop is here, but I did write somewhere, if the hourly candle closes below that previous low we made, or we're looking good, we're not signed it. Basically, if the 4-hour bearish value gets closed above, I will manually be exiting the trade. TP will be when volume dies down after the sell side liquidity is at the best at the equal lows at the bottom. Okay, so whatever trade's going. Trade hit this 1 hour here, or this thing here, $75 in profit. Now we're going BE is what I wrote. Okay, we're tracing a little bit. It's still fine. It's still looking good. The trade was still not invalidated at this point, right? And then at one point I wrote profits taken after trailing SL plus $85, right? So keep in mind, again, as I wrote, I won $90 on a trade. I won $85 on the other trade, but I only lost 15 when I lost. Why is that? Because I managed my risks properly. I managed my risk accordingly. Okay. So if that makes any sense to you guys, or no, you resonate with any of this, please drop me a subscribe for the next episode. Drop me a follow. Go see my TikTok, my Instagram, whatever you want. Comment down below if you if you have any questions. I also have a free Discord where I live trade every single day. So again, smash that like, sub to the channel, and let's keep leveling up together, guys. I love y'all, and I'll catch you guys in the next one. Peace.